Howdy, guys. Welcome back to the Land Talk Podcast. We're on episode 16 today. And we hope with Land Talk Podcast that you're gaining some information that'll help you on a property that you want to buy one day or maybe one you already have. So we're trying to find topics that'll help you there. Today with us, we've got Jack Procter. He's a loan officer from Ag Trust Farm Credit. Jack, welcome to the podcast. We're happy to have you here. Give us a rundown, kind of who you are, where you came from, and all that sort of stuff.
Yeah, absolutely. I'm glad to be here. I grew up in Lampasas County. My family's been there. I believe I'm the third or fourth generation Procter to come out of Lampasas County. My dad grew up there. We ranched there. My dad actually works in the financing industry as well. I moved from Lampasas, went to school at A&M, and it was there that I found Ag Trust. I actually an internship my junior year. Got hired as an intern at Ag Trust. It was supposed to be an 8-week long internship, and I haven't left since. I got really lucky and caught them at a weak moment, and they let me stay on.
There you go.
But when that internship started, after the technical 8 weeks of the internship, I joined the credit team as a credit analyst intern and worked with a great credit analyst to kind of learn the ins and outs of credit, what to look for on a tax return, what can and can't be financed. And I feel that really boosted me in my lending career. I have, I'm not the best credit underwriter. I don't have, the greatest credit knowledge, but I have enough to get me by. I can be on the phone with somebody and know what to talk about, whether I'm talking to somebody who owns multiple businesses and entities or someone that's just a W-2 salary earner. Anyways, I continued through with that until I graduated. I graduated A&M on a Friday and started full-time for Ag Trust that Monday as a loan officer here in Georgetown.
There you go. So working for Ag Trust, I know that's part of the farm credit system. Kind of give us a brief rundown on what it means to be part of the farm credit system. And maybe some of the history of Ag Trust.
For sure. So the farm credit system started in 1916, and we've just kind of evolved into what we are now. Ag Trust and other farm credit associations are a GSE, a government-sponsored enterprise. We don't owe the government any money. They don't owe us any money, but they did give us the seed money to get started back in 1916. Ag Trust originally came around in 1917. We weren't called Ag Trust then, and we've just had mergers and acquisitions over time. So when Farm Credit originally started, they had two different farm credit banks for each county. They had what they call a PCA and a FLICA. PCA is your shorter term production loans, so loans to buy cattle, loans to finance your crops, trailer loans, equipment loans, and FLICA is your longer term land loans. And just through mergers and acquisitions over time, farm credits have become, for the most part, all but one in Texas is known as an ACA, an Agricultural Credit Association, so that we can lend on both short-term loans and longer-term land notes. And from that, Ag Trust previously was called Lone Star Ag Credit. We merged in 2023 with a farm credit out of New Mexico called Ag New Mexico. And with that merger, we changed our name to Ag Trust. Hard to be a Lone Star in New Mexico. So we still get a few questions about that every now and again. People, Lone Star was around, and before Lone Star, it was Federal Land Bank. And from that, we've merged to Ag Trust.
Yeah, and I remember Texas Land Bank some years ago too. So,
yes, sir.
Yeah. So names changes. So when y'all are getting money, y'all got this originally from the government. I know we get a lot of questions about loans just as far as rates. So, a lot of times the Fed drops the rates and people call me, well, are things better or worse? Kind of give me a rundown of where y'all get we know where you get your money from, but how those rates are figured on your end compared to, your Fannie Mae, Freddie Mac loans.
Right. Yes, sir. So within the Farm Credit System, there's 4 Farm Credit District funding banks, and we fall under the Farm Credit Bank of Texas, which is where we get our funds from, and they get theirs essentially from the bond market. Our rates follow the treasury rates more closely than the Fed rates, and so we do get some questions and some calls when the Fed cuts rates, and people expect to see a 25 basis point decrease in their rate, and our rates don't follow the Fed rates. We're funded essentially from the bond market.
Right, right. And I think typically this is just what I think. I mean, as far as land loans versus a home loan, typically I think of land loans being about 1% higher. Is that kind of what y'all normally see, or does it vary a little more than that?
Yes, sir, that's pretty close. So within our ability on rates is varying rate terms most of the time. If it's just a straight land note, no improvements on it or anything like that, we have the ability to go up to a 30-year note. And from that, we can lock the rate anywhere from 1 year to 30 years. Right. A 1-year rate is going to be your lowest rate, but it's going to have the most risk assumed. And
sure.
As in 1 year, when that rate expires, it's going to relock to whatever the market rate is at that time. Whereas a 30-year is going to be the highest, but it's never going to increase from there.
Right.
A lot of times, what's been the most popular is anywhere from a 3 to a 7-year rate term. And I really believe that the reason for that is because being a non-depository institution funded essentially from the bond market, we have the ability to convert rates for people. So if somebody books a loan tomorrow on a 5-year rate at, say, 7%, not including patronage, 2 years from now, the rate's 5.5%. For a small fee, we can convert that rate and lock it down at 5.5%. It's a lot of people think of that as a refinance, but it doesn't have all the fees and title work that come with a refinance. It's a few signatures and a minimal fee.
Yeah, and I had a loan some years ago. I think it was during COVID. I don't remember the numbers now, but let's say the interest rate was, 7%. And I remember getting a call saying, hey, we're going to drop you to 4.68. And of course, I'm ecstatic. My monthly rate goes down. I didn't have to pay you $2,000 or $3,000 to refinance this thing. So, no, I mean, that rate change is a big tool. And you kind of mentioned patronage. So give us a rundown on patronage, how what y'all do versus a normal bank, and kind of what a patronage is and how it helps borrowers. So.
Yes, sir. So Ag Trust is a cooperative. And part of that co-op, there's 3 main areas that I like to explain to new borrowers when they're considering a land loan with us. That's going to affect them differently than if they went to a credit union or commercial bank, whether it be Cadence, Wells Fargo, etc.
Sure.
The first is upon the origination of the loan, we require $1,000 stock purchase. That $1,000 is fully refunded once they've paid that loan in full, but that purchase is a buy-in to the co-op. They're now a customer owner of Ag Trust. 2 other things come along with that. One is they get voting rights for our board of directors. Our board is made up primarily of other borrowers from each different region that Ag Trust has territory in. And then the next is our patronage dividend. So every year we share our profits with our customer owners. Last year we shared 53% of our total profits we sent back to our customer owners. And on an average basis per customer, we sent back 131 basis points of what they paid in interest. So that's 1.31% knocked off their rate. And, one thing that I really, really admire about Ag Trust and kind of the way that our board and our executive committee has gone about patronage is the number one thing that's discussed. That's always put first. And then another thing that's different than a lot of farm credits is Ag Trust pays a full cash patronage. So we believe that our customer owners know best what to do with their money for the most part, and we send them all that right away. We don't hold on to it. We give it to them when it's due. Each year we send patronage out in March.
Right. So I guess in doing land loans, kind of what's y'all's bread and butter? What do y'all do? Just big loans? Do y'all do small stuff? Kind of where do y'all land on those?
We're all over the board. Just in the start of 2026, we've had loans ranging from close to 10 million all the way down to 11,000. I do think that over the average of 2025, our average size loan was between 250 and 350,000. But with that, there's been some outliers. There's been smaller equipment notes and larger land purchases.
Sure. And so speaking of other types of loans, do y'all just do land, or do y'all do? You mentioned some loans on equipment and cattle. So what do y'all do there?
We do just about anything that's involved in agriculture. So loans to buy cattle, equipment, any of that shorter term financing. And then some of our longer term financing includes land purchases. And also we have a one-time closed construction program. So what we see a lot of times is somebody comes along and they buy a piece of land that they eventually want to make their homestead. 2 or 3 years down the road, they're ready to build that home. And the way our construction loan program works, it's unique and neat, and there is a few other places where you can get one-time close, but for the most part it's unique in that when a customer comes to us, we're going to take their plans and their construction bids, and majority of the time for a normal sized house they have 12 months interest only on their note. So as their contractor makes their monthly draws and gets paid, we're only requiring them to pay the interest on what's been used. And then after that final draw is made, it's automatically turned out into a principal and interest note. So there's not a second closing. You don't have to go back to a title company.
Right. And I know one of the big things, just from having built a house, I remember I had to pay interest only on the entire amount that I was trying to borrow. It wasn't as I drew it. And I mean, I like that about y'all, is that if you're doing it kind of section by section as you get a draw, you're not paying all that interest the whole time, because I know that can add up real quick. So what about collateral? So I've seen a lot more loans lately where people are collateralizing properties they already own. Are you seeing that a lot more? Kind of give me the rundown there. I don't know if a lot of folks know. I'm sure some folks do, but explain collateralizing another asset.
Right. Yes, sir. So sometimes that can work, sometimes it can't. In the state of Texas, Texas has homestead lending rules and requirements, and a lot of times those will knock people out from being able to qualify placing their extra land as collateral. Those homestead rules and regulations state that for every married couple, it's 200 acres. For a single individual, it's 100 acres. That is your homestead. And we can't use that as collateral to purchase another piece of property. We can use it as collateral to help you do ag improvements, build a house. But if you're a married couple and you own 50 acres outside Rockdale and you want to buy another 20 acres outside Cameron, we can't use that 50 acres we can't get a lien on that 50 acres to use it. Now there are some, I guess, ways around it. If someone has a urban homestead, so you have 50 acres in Rockdale and you live inside College Station, in the city limits of College Station, a very urban address, then we could use that as collateral. But yeah, I do get a lot of questions on that. Texas is one of a few states that does that. And there has been some heartache and pain caused from that. There's been some borrowers that focus on paying off that land as quick as they can,
Sure.
so that they can go on to the next one, and then they don't have the needed money for a down payment.
Right. So kind of in the big picture, why Ag Trust over somebody else? Kind of give me, toot your horn a little bit. What does Ag Trust do well, and why should folks use you?
Right. So when you're looking at land, there's a multitude of different reasons, and a multitude of why I love Ag Trust. I mentioned earlier my dad's in the financing industry. He works for a community bank, just your regular bank. And one thing that's different with them is there's not the common tie between customers. I know that when I pick up the phone or call somebody, there's going to be a common tie back to agriculture. We may have different experiences growing up in adult life. Our family life may look different, but at the end of the day, everybody working with and for Ag Trust is tied back to agriculture in that sense. And I think what sets us apart is that, We specialize in our area in land, and we're able to go up to 30 years. We can do it for 15 or 20% down. We pay patronage every year, send that check to our customers, hand deliver it sometimes. And I think the combination of that, having the knowledge for the areas and the agriculture, really helps our customers know what they're doing. I have a lot of customers that after we close, they reach back out and, they may be moving to the area and now they need somebody to clear brush. I can help them find somebody to do that. And it's the same for all of our offices. I think the knowledge that our customer isn't just a customer, they're a customer owner in the co-op really is what drives us and helps us keep functioning. And that's not forgotten, as you get up higher in the board. Ag Trust isn't, the largest farm credit in the nation by any means, or even in the district. But some of that small, tight-knit association, I think, goes forward to better customer service in a way.
For sure. And I'm sure you have a bunch of folks that have multiple loans with you. I know a lot of folks that you may have one, but they may have 5 loans with you. And I think that kind of goes to show that, it's a great tool. I think there is a time and a place for a conventional bank, and there's some times where maybe it's a better option. But, on a lot of our land stuff, typically somebody in the farm credit system is the way to go. I think y'all have got a lot going. So anyway, like I said, we worked together for a while now. I definitely want to get you on here and kind of let you give your spiel and kind of your pitch. And like I said, we get a lot of questions, so I'm hoping we can answer them here about patronage and dividends and that sort of thing. So anything else you want to say before you wrap up on this one?
Yeah, I mean, I think another thing that sets Ag Trust apart from other competitors is the interest rate conversion program. Not only are we going to pay that patronage that's going to deduct, your interest rate, but aside from that, if interest rates ever go down, we have the ability to convert that rate for you.
Yeah.
And it doesn't change anything on our end. So it's, it benefits us to do that for our customers. Because like you said, a lot of times customers come back for 1, 2, 3, 4, 5, 6 loans. Everybody has a stake in the association. So it benefits us to do all that we can for our customers, whether that's a interest rate conversion or paying them a cash patronage every year.
No, I agree, but also I feel like y'all have kind of changed over the years and kind of adapted some too. I think when I first started, you saw a lot of 15-year notes, and then they went to like 20s, and now you have 30s, which I think is kind of a sign of the times with inflation too. I mean, I just think you need longer loans to make the payment affordable, but I do like that, like I said, things have been shifting. I feel like the farm credit system has been adapting to the needs of the borrowers. When I first started, I think it was 20% down payment, no ifs, ands, or buts. And now you're starting to see some 15% options. So, I think that's cool. And I think you're seeing that in the housing world too. They're talking about a 50-year note, which I think it's terrible. But anyway, I think it is cool how things have kind of shifted to make things better for the borrower.
Yes, sir. Yeah. I mean, at the end of the day, Farm Credit, Ag Trust in general, and all of our employees at Ag Trust, we're just here to help people stay involved in agriculture or get involved in agriculture. And what agriculture looked like 50, 60 years ago is different than today. A lot of people grew up in the country, moved to the city, and now as they're retiring, they want to get back to that country life. And not everybody can afford, 100 acres outside of Austin.
Sure.
What's country for some people might be 10 acres outside of Rockdale. And just with inflation and land prices, that's all that they can afford.
Yeah.
And so we've adjusted and adapted to that.
Yeah. And one of the other things I like about the farm credit system is y'all typically do a lot of things in-house. You'll have like an in-house appraiser for certain deals. The appraiser y'all have had, I've known her for years. I like when I can pick up the phone and I know who I'm going to get, and I know that I can either argue with her and make her believe that I'm right or or maybe I won't. But but it is nice to know who I'm talking to. I just feel like I'm kind of bashing home loans, but a lot of times on home loans, you feel like you're very distant from your lender. I feel like this appraiser is some random person in a room in Michigan that I'm never going to meet. So that's what's nice about the farm credit system. I pick up the phone. Generally, I know who I'm going to talk to. And I can kind of, if there's a problem, I can reason with them or try to walk through it or find a solution. Because you know as well as I do, we run into problems, whether it's with underwriting or whether it's something, the title work or something. And I think it's nice to pick up the phone and say, well, I know I'm going to get Jack, and Jack's trying to accomplish the same goal that I am. So I've always found that helpful. And like I said, with having in-house appraisers, I can call them and get information from them, or they'll call me and say, hey, do you have anything that'll help us or whatever. But I do like that. Like I said, it kind of makes a more personal experience out of something that, typically is very impersonal. So, all that being said, Jack, give us your phone number and and where your office at and all that stuff if people want to get with you.
Yeah, for sure. So my phone number is 512-588-9995. I'm officed out of Georgetown. My 4 primary counties that I cover is Bell, Williamson, Milam, and Falls County. But Ag Trust has territory in over 81 counties in Texas and New Mexico. So, if there's ever any questions, and even if it's, out of my county and it's not something that I could help you with finance-wise, I'd love to talk to you about how to get prepared and what that looks like and anything that I can help with. Yeah.
Thanks for coming on, Jack. We're going to go to the next episode now. On the next one, we're going to be talking about loans in general. So we'll keep Jack on the next one, and maybe you can get some insight into kind of the normal process working through a loan with them on your typical end deal. So catch us next time.